Good afternoon, everyone. This is Ashish Kyal here from Wave Strategy Advisors, and welcome again to the Elliott Wave Express, which we started as an initiative by Wave Strategy Advisors. It's a video update initiative which we have probably once in 2 weeks. And in this update today, we are going to discuss some important aspects of Neo Wave when applied to Nifty. Along with that, we will be discussing a few things about mutual fund investments, a very different way of looking at mutual fund investments. And before I start with that, I'd like everyone to be aware that we have launched a new website with a very good compatibility with social media platforms. And we have started and launched a platform where discussions can be done. It's a discussion forum where you can post your charts, where you can comment on any of the articles. You can comment in the discussion forums. You can rate the articles. So it will become more of a discussion platform where users can come together, share their views, share their Elliott wave counts or their technical charts. So I want to develop something from a learning perspective where people do brainstorming and probably not try to negate the views, but a collaborative way of learning is something which we are strongly focusing on. As and when possible, I will try to comment back on the charts that you are posting, so that there are always some learning involving myself. I'll also learn from what you post. So I will really appreciate if you please start participating on the discussion forum, start commenting, and start rating. You can visit www.wavesstrategy.com, and you'll find the discussion forums part on the right hand side bottom. So over there, from there you can go and visit the page. So in case of any queries, you can always reach out to me or my team on 9920422202. So let's quickly start with what's going on with Indian markets, because that is what this news channel is all about, and looking at the Elliott wave and Neo wave perspective. Now Nifty has been all over the places over past 2 weeks since we had the discussion. I distinctly remember in the previous video update I said this down move is not going to be lasting for a long time, since we are approaching very close to the 55 days time cycle. And if you remember, the low which was formed on Nifty was exactly near 8270, which was the 55th day of the time cycle. So 54-55 days is a time cycle which is working brilliantly, and based on that time cycle, we have been predicting that an upturn should happen, where majority were expecting 7,800 or 7,600 levels. So that is the power of time cycle, I would say. However, you have to combine those time cycles along with Elliott wave techniques and Neo wave techniques, which is the advanced concepts of Elliott wave, because it helps us to understand the pattern which is ongoing in terms of price. Time will help us to understand the turning points, whereas for price we need to understand the Neo wave pattern. And since 15th January onwards, I think that we are forming an extracting triangle pattern on Nifty. Now, extracting triangle is a very different pattern which is not defined anywhere else but defined by Mr. Glanley. As per that pattern, the up legs starts getting smaller and the down legs start getting bigger. So if we check from 8260, which was a truncated low of the prior downfall, 8260 is where this third standard correction started, and each time the up move which happened has been getting smaller, whereas the down move has been bigger, with the prior fall the biggest from 9119, where we were expecting a fall to happen, and 8270 was the biggest fall since 15th January onwards. And this rise which is ongoing right now is going to be wave E of the extracting triangle, and this wave E should be shorter than wave C. If that has to happen, then we are going to see a termination somewhere around 8,800 levels, or probably maximum to the extent of 8,900. However, one always have to remember this is based on the forecasting model. We also have to understand, unless and until we see the reactive method, which is the bar technique of closing below the prior day's low, the trend will not change, because any trend will start only after we see a close below the prior bar's low in order for a reversal, or close above the prior bar's high will confirm an uptrend is intact. So that is a very important aspect. So you have to combine the predictive forecasting model along with reactive so that you can accordingly position size. So that is how we use. So we combine time cycles, we combine neo wave, and we combine the bar techniques, and all of these we collaborate together and put it in our research report, the financial waves short-term update, which is available for subscription to the clients. And so the current structure, as I said, suggests that the uptrend is in mature stage. However, there is no negative confirmation as of now. Today there was a rating upgrade by Moody's, and I was expecting a good move on upside if this has to be sustained. However, we can clearly see even after such a positive outlook, the move on upside was not sustained, and there was an immediate move on the downside, which made Nifty enter into red zone temporarily, and then we are seeing some consolidation. So this kind of movements of volatility clearly indicates that the up move which has started from the recent lows of around 8270 is corrective, and obviously since we are in E leg of a triangle pattern and each of the legs of triangle are corrective, so this E leg has to be corrective, which we are witnessing currently. And this E leg is actually forming a diametric pattern in the form of A, B, C, D, E, F, G, which is a 7-legged pattern, and price looks to be currently in wave E of this diametric. So to avoid the confusion, on a bigger degree, it's an extracting triangle with wave E ongoing. On one lower degree, this wave E is forming a diametric pattern. Okay, so that is my outlook on Nifty, and I think that over next 3 to 4 days is going to be very crucial. And once we see a fall below 8,600 zone, that will be an indication that the uptrend which was ongoing is now complete, and the short term, definitely a short term reversal has started. Probably this time it is going to break 8,200, and we are then going to see a move towards 7,600 odd levels. Again, that is forecasting, but we have to monitor very closely how each of the legs are developing from here. If momentum builds up beyond 8,900 levels, then we have to revisit the wave counts and convert that into an expanding triangle pattern, which is a very challenging pattern. So for now, 8,900, 8,800 is first zone, 8,900 is the maximum zone that we are looking at on Nifty, and break of 8,600 support level will be some kind of a bearish indication. The second aspect I wanted to discuss about is the mutual fund redefining the mutual fund investments. I mean, I have been looking at a lot of mutual fund NAV and how the forecasting has been done, how the ratings are done, and I see that maximum rating agencies and other aspects are focusing more on what has been delivered over the past 3 to 5 months, and giving the ratings as the top performer funds of which has delivered over past 3 to 5 months. No doubt on that the fund manager has done exceptionally good. However, in next 3 to 5 years, sorry, that's not 3 to 5 months, that should be 3 to 5 years I am talking in the past. In next 3 to 5 years, what is going to outperform is going to be important. And for doing that, we have started applying Elliott wave on NAVs of the mutual funds. This is a complete different way of looking at mutual funds. And very soon we will be even starting with advising on which fund to invest in which manner, what should be the proportion in which the investment should be done. And a lot of things also depend on timing the investments. I mean, you will hear that the mutual fund has given huge returns since August 2013 because that was the low. However, will you have put money in August 2013 in that mutual fund? So timing the mutual fund is also very important in order to generate a very good return. Suppose if you buy a fund, you might have bought a fund at the highs of 2008. That wouldn't have helped you for next 3 years because all the funds were doing badly because of the systematic risk. So it becomes very important to understand how to time even when you are putting money in mutual funds. Ultimately, in case of a systematic sell-off and systematic risk, everything collapses together. And that is a very near possibility that we are observing over the period of next 1 month. So so how do you go about investments in mutual funds? So if you have any queries with respect to that, you can always get in touch with us on helpdesk@wavesstrategy.com, or again you can call us on 9920422202. And the best way of reaching out to us is again on the discussion forum on our website, where you can always post your charts and start discussing even about the funds, about the stocks, about commodities or forex, and your views will be highly appreciated. So that's it from my side as of now, and I'll again catch back to you. And in case of questions, feel free to get in touch with me. Thank you very much.